All right, folks, welcome back. This is episode, what is it, 41? Yeah, geez, we're getting so far. I'm forgetting the numbers, man. I need to prepare because most of these recordings, I just wing it and have no sort of script preparation, none of that. I just open OBS and start recording. Anyway, episode 41 of the ICT Mastery Mentorship. In this episode, we're going to be going over a PDRA that I've teased multiple times. When I say multiple, I mean over 15 times now. And I'm finally teaching it to you, the mitigation block. Literally my favorite PDRA because it is just so amazing. You're gonna see why I say that and why it's my favorite PD rate because it is just so strong, so significant, and very, very reliable. Like I use this on a daily basis. Like literally, I probably have a drawing of a mitigation block on my Nasdaq chart. Let's see. Yep, it's right there. That's how much I use it. It's always there. And I forgot my gremlin is still on. I guess I'll just keep her there. Probably have to move her every once in a while. But anyway, the mitigation block is think of it as a last chance for institutions or interbank to hedge their positions before price really starts displacing. And or if retail traders are in the negative or are about to get liquidated, they can use the mitigation block to mitigate their losses and, not lose too much. You know what I'm saying? Basically like a not a mental stop loss, but a last resort type of stop loss. And you need to go over here. Let me turn you down. Nope. Nope. Hold on. I'm probably gonna edit this out. Probably not. Okay. Mitigation block. I'm gonna highlight one just so I can show it to you. You find a good one. Well, no, let me not do that. Let's not script this because I don't like scripting my videos. We have one right here. Right there. There we go. This would be a mitigation block. Think of it as a continuation PD array. You have reversal PD arrays, continuation PD arrays. Think of it as that. This is mainly continuation. Okay, you can see price reverse with this, yes, but 90 to 80% of the time you're going to see price continuing with this PD array. Okay, in which you can see it jump up here, it forms, it touches it, and continues. So point proven right there immediately, right? Let me show you a couple more examples of this. This is going to be our primary example where you learn it, but I'm just going to show you real quick. So this PD array forms whenever, for example, you see this, how price is going down? Price is going down, right? For example, this is an example. The mitigation block would form whenever a low gets created while price is going down, okay? In which price will break that low and reprice back up into the swing of the creation of that swing low and refer to the mitigation block. So let me show you that real quick. This right here, if I can get it for you, is the mitigation block. Why and how, you ask? Let's see. Here's the low right there, right? That's the low. So we have a potential mitigation block that can be created if the next candle does not break that low and continue going down. Does it do it? Nope. So we have an official mitigation block, okay? What activates the mitigation block is when price breaks below that low. I'm about to get there. I'm about to get to the formation of it. Just give me a minute because there's some things you got to know before we learn. Ready? The deepest down close candle as the swing low or before the swing low is your mitigation block. You're probably like, as? What do you mean as? As, I mean, for example, let's go back to that original example we had. Where's it at? It's over here somewhere. Yeah. When I say as, oh well, this doesn't even have it, but let me find one so I can. Yeah, here we go. Yep, there's one right here. There's one right there. When I say as, I mean the mitigation block is being possessed by the candle that actually creates the swing high for the mitigation block to even be created and or get activated. You see that? This is the swing high in which the what's the word? The deepest up close candle would be this one right here. And is it what? What is it? It's the actual candle that creates the high that initially creates the mitigation block. Because, for example, if price wants to continue higher and we want to create a bullish mitigation block, we have to do what? Create a swing high while price is going higher. Does it do that? Yes. Where's the mitigation block? Within that candle that actually creates a swing high. Get it? It's pretty simple. So when price hits this mitigation block, it should hit it and react. Now, what you can do, right? Also, I forgot to mention this in the previous mitigation block teaching, the standalone one. You can actually grade the candle. Yes, you can. You can grade the candle. See if I can pull this out. You can grade the candle into quadrants that possesses the mitigation block. So this entire candle here can be graded. Now you're probably like, what about this swing here? That isn't the mitigation block violated? No. Now that's where we move on. Let me mark that again. Hold on, so you won't get confused. Let me mark that again for you. Okay, here we go. So you see how this candle's low breaks the initial mitigation blocks candle, or the candle that possesses the mitigation block. Well, what do you think is going on here? What's your idea? You're probably like, is the violation point that? Does the mitigation block stay within this candle? Does it expand to this candle? What can possibly happen here? I'm just letting you use your mind for right now before I say anything. Well, what happens here, right? Since this low breaks the mitigation block candle low before it gets activated, the violation point just moves lower. That's it. So, for example, if you're in a trade, right?
Hmm.
Oh, she's curious, I guess. But if you're in a trade, let me pull this up. Your stop loss would be that low, okay? Because that's the new violation point of the mitigation block. It wouldn't be this candle. It wouldn't be the low of the mitigation block candle. Why? Because that candle's low has already been broken. Get it? Simple. It's not too hard, right? So if you were in this trade and you saw it respecting the mitigation block pretty well and you entered, and for example, it ran your stop, like if I can get like a little drawing tool or something like that. Here we go. If it, for example, ran your stop down here, your stop loss would be right there at the violation point. Why? Because there is a deeper swing, past the mitigation block's initial low, mitigation block candle's initial low. Get it? It's pretty easy. I hope I'm teaching as well because I feel like I'm rusty right now for the teaching part. Because for some reason when I record at night, it's like my teaching skills just get reduced by 50%. It's pretty odd. Anyway, let me find a couple more examples for you. Mitigation blocks. Oh wow, I'm still on my original drawings. My bad. My bad. My bad. My bad. Okay, here we go. Now here's one thing before we go over this, right? Let me draw like a little diagram for you. We're 7 minutes in, and I have to draw this. Okay. I have not taught the breaker yet, in which I could spoil. Let me see. Hold on. I probably could spoil it because I'm about to teach it real soon. Yeah, so I guess I can spoil it. A breaker forms like this. Hold on. Let me just grab my tool. Breaker. Let's say you got buy side liquidity over here. A breaker forms by purging buy side liquidity. I mean, not directly, not exactly buy side liquidity, but just purging some form of liquidity. So let me draw that for you. It'll go up. Uh, Okay. Right there will be the breaker. Okay. Right there will be the breaker. That's all you need to know. With a mitigation block, let's say this is buy side liquidity, just a random swing. Just a random swing. Think of the mitigation block forming when there's a failure swing. That's basically what happens. So we have liquidity up here. We go up, come back down, go up, fail to reach the buy side liquidity, then we drop. The mitigation block would be right there. So think of it as that. The mitigation block, not even think of it. That's literally how it is. The mitigation block forms when buy side liquidity is not purged. It's just continuing. Okay. And if you look at our previous examples, that's exactly what's happening. Let me delete these real quick. Like for example, see this here? See this? This is buy side, or that's just the previous swing high. We create the low before continuing lower. The mitigation block is right here. Deepest down close candle before and or as the candle that creates the swing low, in which it's before because the deepest down close candle is not this candle here. It's just not. So it'll be this candle right here, in which you notice, does price reach that buy side liquidity or that swing high here? No, no, it doesn't. In which I might just make this video a little longer because I really want you to understand this because this PD ray has a lot of potential. I've made a lot of money off this PD ray. I'm not gonna lie. This PD ray prints. It really does. This is an ATM machine if you know how to use it well. So I'm gonna teach you this really well. This might go on to be a 25-minute teaching. Who knows? We'll see once I upload it. But anyway, let me find one more for you. All right, I found another example, and I need to go over this real quick because I don't think I directed your attention to how it actually forms and what the mitigation block is. So this is a bullish mitigation block. Okay, go ahead and categorize this in your head. A bullish mitigation block looks like this. Fails to break the previous swing low, okay, in which we create a swing high when price is going higher, a temporary swing high in which price is going to break it to activate the mitigation block. The actual mitigation block pricing would be right here, the deepest up close candle before or as the actual candle that creates the swing high, in which, in this case, it's just a candle before. Okay, that's it, just a candle before. So this would be your mitigation block. Why? Deepest up close before the swing high. Simple, right? When we break above the swing high, mitigation block is
うー
activated.
ん、
Price can then
さ
refer
す
back
が
down.
の私も研究続きでは体力が。う
uh,
ん。
Okay, guess I'll keep that in there. I'm not going to edit that out. But the mitigation block is activated when it prices up here, drops back down into the mitigation block, respects it. If you want to grade it, sure, why not? Fails to hit the upper quadrant. Major respect going on here, in which we do glide higher, but that's normal because it's close to the end of the day, and then it's lunchtime when it hits it, so it's pretty normal. But you get the point. That's how mitigation block works. Now, since I just used that as an example to explain the formation and the anatomy of a mitigation block, now we're going to do a bearish example so you can really understand this. Okay, here we go. I'm going to go a little bit deeper into the swing creation over here. So, from the start of the entire swing that creates the swing low for the creation of a mitigation block is your swing that you will use to classify your failure swing. Okay, listen, repeat those words in your head, or just replay the video. Just replay the video like right now, if you need to. Okay, if not, you're good. Those words I just said is very, very important. It's an example that's right here. Where does the swing begin to create this swing low? Where does it start? At what point does it start to create that swing low? Right there, at this candle right here. That's where it begins to drop lower and create that swing low. So when we start doing that, that's the swing that you do not want to see get broken for it to stay a mitigation block. If it stays below that, it's a mitigation block. So we will mark this as expected respect. We want to see price stay below this. I'm in short, you don't need to know this. You don't. But this is just an advanced skill that I've developed over time of using these mitigation blocks. I'm basically teaching you how to predict when a mitigation block is going to potentially form. That's all I'm doing right here. And it'll just give you a deeper understanding and, easier experience when it comes to learning them from me and just using them. So that's the failure swing here. Creates a swing low, jumps up to actually create the swing low because for it to create a low, it has to go higher after it, spikes down and create that low, right? You can't just create the low, then go lower because there is no low, right? So we drop lower. The start of the run lower to create this low is up here. That would be our expected respect level for the mitigation block to stay a mitigation block. If not, it'll switch into a breaker. We go up, confirm this low, drop down, break below it. The mitigation block is now activated. Where's the mitigation block? Deepest down close candle as the candle that creates the swing low, or the deepest down close candle that's before the candle that creates the swing low. In which, in this case, it's actually the candle that creates the swing low, the deepest down close. So we're gonna mark that as a mitigation block. And does price ever hit this in the future? Yep, never mind, it does. It does hit it in the future. Let me draw this out, and as you can see, jumps up into it. Look at the respect. This is why I love this PD rate. Look at this. Look. Look at this. It reacts almost not reacts instantly, but you can just see how potent. Geez, that was a very that T. I would pronounce that T like. Geez, that was a crazy T. You heard me? I said potent. Anyway, this PD array is very potent when it comes to its precision, reaction, and displacement. Like just look at the displacement that comes after this. Oh my God, it goes literally through the screen, off the charts. See what I did there? I need to stop doing that. I'm okay. I'm not gonna make any puns, I swear. But you get the point. It's very, very, very strong. Literally, right before 9:30, it begins accumulating at that PD array. In which, when 9:30 kicks in, literally within one 15-minute candle, guess how much it drops? 188 points in 15 minutes. Pretty nice, isn't it? Yeah, I think so, me personally. But if you want to measure the whole mitigation block and the whole rundown, sure, it's probably like 250. Yep, I was right. 249 and a tick. And a singular tick. Just had to include that in there, huh? But you get it. Mitigation blocks, pretty easy and very, very, very strong, as you can clearly see. I don't want to make this video longer than 20 minutes because I think I've, taught you majority of it. So we're going to go over maybe two more examples and I'll be done this year. Two more examples. Well, no, one example and one trade idea. Let's scratch that. Here's one here. Start of the run to create this swing high here is down here. See that? So this would be your expected respect. Does it ever break that? No. So the mitigation block is confirmed. Here's a swing high. Drops lower to confirm the high being created. We break above it. Boom. Mitigation block is activated. Drops down into it. Reacts higher. Where is the mitigation block? Right there. Boom. Right there. Dilly dallies around a little bit, but eventually displaces as it should because this PD array is very, very, very strong. How much does it displace, JJ? Let's say. How much does it displace? Wow, 222 points. Took about maybe 3 hours. Let me see. Here to here. Yeah, about 3 hours. Jeez, I keep guessing these things right to the T. My goodness. Anyway, that's another mitigation block. Pretty simple, right? Now let's go through a trade idea because I have not been putting together all the confluences recently. So let's do that right about now. Um, Let me turn on the kill zones because you gotta have the kill zones, right? Gotta have those. And first thing we're gonna do is mark the midnight opening price, wherever that is. Here we go. There's midnight. Draw that out. This is gonna be the final example, and then I'm gonna go to bed, and you should go to bed too if you're watching this at night. Where's the midnight opening open? I said midnight opening open. I'm gonna keep that in there. I'm gonna start calling it that. Anyway, midnight opening price, we can see that after the midnight opening price is created, we accumulate, we drop down, manipulate, accumulate a little bit more during pre-market. Guess what that should do? That's just send. I said shend. Holy my, you hear me, man? God, I need to lock in. But it accumulates during pre-market, in which that should send New York into what? Into heavy displacement. Does that happen? Yeah, it does. Does indeed happen. In which we correct during London close back into the New York. See, I was about to say New York opening price, but I didn't say it all the way. Midnight opening price. Okay, I'm trying not to get you confused by my stuttering, but I'm sure you're smart enough to, filter out what I'm trying to say. But it reprices back into the midnight opening price, jumps higher. But we haven't even used all of our trade ideas, right? We haven't. No, not at all. We are actively creating a deeper discount. When I say actively, I mean let me just turn off these kill zones. We're just dropping, retracing, dropping, retracing, dropping, retracing, dropping. So we're creating a very, very deep discount, which we can see here, here to here. That would be very, very deep discount, as you can see. So the midnight opening price, the entirety of it is in a discount. So whenever we reprice to it, we are doing the third rule of ICT concepts, or just the market in general, which is repricing to a equilibrium and or a discount or premium, in which in this case it's a discount. So we have two confluences, power of three for the midnight opening price, and we earn a deep discount. Simple, right? Oh, and the third confluence is that pre-market is accumulating. Let me just go to the 5 minutes so you can see this. Yep. Majority of the time it accumulates starting from 7 to, what's that, 8:55. So about 2 hours it accumulates, in which it starts tweaking out around here, but it's tweaking out efficiently. The candles do get bigger, but the only gap that really exists was that one there, in which it did eventually fill it. So it didn't tweak out too much, but it definitely tweaked for a little bit, in which that pre-market accumulation should send New York into a just it should just move, and it does eventually move. Not even eventually, it does it immediately. I need to, start using my words correctly. But yeah, um, what are there other confluences I've taught you? Geez, I'm even starting to forget. Hold on a second. Oh nope, I did not mean to go to Forex Factory. Oh, I did not mean to go to that either. Sorry for the flashbang. So sorry. Um, uh, I'm so sorry. I feel like an idiot. How am I teaching you this and I can't even remember what I taught you? Such a goofy teacher, right? Anyway, but yeah, just using those confluences alone, we're not gonna put too much together. But basically, Indirectly, what I'm trying to tell you is use your confluences. Do not use these by yourself. Okay, remember that. I'm gonna start drilling that in your head so you remember to not use any of these confluences by themselves or any PD rate or any concept by themselves. Okay, please remember that. In which we could use this mitigation block right here. If you want to use that for an entry, if you had a crazy amount of capital to handle, what's that? I don't know, maybe like 89 points with a drawdown. Bro, if you had the capital to handle that, yeah, you can trade this no problem. Or if you had your stop as large as 111 points, then sure, you can trade this 5-minute mitigation block. Never do that if you have $100,000 in an account. Yeah, sure, but obviously don't do that. And reacts off the mitigation block, jumps higher, displaces. All right, episode's over. You get the point. This is one of my favorite PD rays. It is amazing, truly, truly amazing if you know how to use it. And when I say know how to use it, I mean putting other confluences together to confirm if it's actually going to be respected or not. So, um, yeah, this is the end. Just okay, I talk a little too much. 21 minutes. Not gonna make it any longer. I'll be ending it here. Good luck and good trading.